Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Waste Management Inc. Annual Report. Waste Management Inc. provides a wide range of environmental solutions to various customers across the globe. The company's services include collection services, where waste and recyclable materials are picked up from their source and transported to transfer stations or disposal sites. They also own and operate transfer stations, landfill gas-to-energy facilities that produce renewable electricity and natural gas, and materials processing facilities. In addition to these core services, the company offers various specialized solutions, such as recycling brokerage services, where they manage the marketing of recyclable materials for third parties. They also collect and market recyclable food and yard waste, sell mulch, compost, soil amendments, and renewable energy. Furthermore, Waste Management provides remediation and construction waste services, manages and markets fly ash, and offers regulated waste and compliance services, RWCS, that includes compliance programs and collection of regulated and specialized waste. The company also provides secure information destruction, SID services, which include the secure destruction and recycling of sorted office paper. These services cater to various industries and customers, including residential, commercial, industrial, and municipal clients in the United States, Canada, Western Europe, and internationally. Unfortunately, I don't have access to the text you provided. However, I can still provide a general essay on what might cause a stock's price to remain stagnant over a period of time. The stock price of Waste Management Inc. has remained relatively unchanged in the past year, leaving investors and analysts wondering about the underlying reasons for this stability. One possible explanation is that the company's financial performance has been consistent but not spectacular, failing to excite investors or prompt significant changes in the stock price. This could be due to a lack of innovation or disruption in the waste management industry, which may have limited the company's ability to grow and expand its market share. Another factor contributing to the stagnant stock price might be the overall market conditions. If the broader market is experiencing volatility or uncertainty, it can affect individual stocks, including Waste Management Inc. Additionally, the company's valuation multiples, such as its price-to-earnings ratio, may have become less attractive to investors, leading to a lack of interest in buying or selling shares. Furthermore, regulatory and environmental factors could also be influencing the stock price. Changes in government policies or regulations affecting the waste management industry might impact the company's operations and profitability, causing investors to reassess their expectations and resulting in no significant changes in the stock price. In conclusion, the reasons for Waste Management Inc.'s stagnant stock price over the past year are likely complex and multifaceted. A combination of factors, including consistent but unexciting financial performance, market conditions, valuation multiples, and regulatory influences, may have contributed to this stability. Waste Management, Inc. market capitalization of $93 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Waste Management, Inc. holds a significant advantage in their industry. Waste Management, Inc. trades at a higher price-to-earnings ratio of 34 times, and a higher price-to-book ratio of 9.31 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The company exhibits a very high leverage profile, with liabilities accounting for 81% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline in a company's financial performance can be attributed to several key factors. Acquisitions and mergers, such as the Stericycle acquisition in 2024, can significantly impact revenue growth or decline by bringing in new customers, increasing market share, and expanding product offerings. Weather-related events like wildfires and hurricanes can also contribute to revenue growth due to increased waste volumes generated by these events. Seasonal fluctuations, particularly in summer months, second and third quarters, can lead to revenue growth or decline as demand for services increases during this period. Long-term contracts with variable elements, such as annual rate changes based on consumer price index or fuel prices, can impact revenue growth or decline. Environmental credits generated through renewable energy production can also contribute to revenue growth or decline. In addition, changes in depreciation and depletion expense, foreign currency translation adjustments, sales of commodities like RNG and RINs, compliance services revenues, and collection of waste and delivery of products can all affect revenue growth or decline. These factors highlight the complexity of revenue drivers and the need for companies to carefully manage their financial performance to achieve sustainable growth. The net income of the company underwent significant fluctuations between 2020-2000 and 2025. Initially, it increased by $44 million in 2021 compared to 2020. However, this trend was short-lived as it decreased by $7 million in 2022. The following year saw a notable increase of $22 million, followed by another rise of $20 million in 2024. Unfortunately, the net income declined by $38 million in 2025. The profit margins also experienced changes during this period. Although the exact figures for 2020-2021 are not provided, it is evident that there was an increase of 1.7% in 2023 compared to 2022. Conversely, a decrease of 1.2% and then another decline of 1.7% were observed in 2024 and 2025, respectively. The reasons behind these changes are multifaceted. Net income fluctuations can be attributed to automation efforts, cost reduction initiatives, inflationary pressures, market price declines for recyclable commodities, intense competition, commodity price volatility, and interest expenses related to the Stericycle acquisition. Profit margin changes were influenced by landfill operations, recycling contamination, operating costs, competitive pricing pressure from reduced waste volumes, economic recession, reduced tax revenue, and high-cost structures of governmental entities and municipalities. The company's financial performance is a significant indicator of its overall health and stability. One key metric that highlights the company's success is its ability to generate positive operating cash flow. This means that the company is able to produce more cash than it consumes from its core operations. According to various pages in the report, including page 5 and page 59, the company confirms that it generates positive operating cash flow. Furthermore, multiple pages, 46, 61, 63, and 79, provide concrete evidence of this trend. Specifically, net cash provided by operating activities was a substantial $6,043 million in 2025, while free cash flow also remained positive at $2,937 million. These figures demonstrate that the company is not only generating sufficient cash from its core operations, but also has a healthy amount of liquidity to invest in growth initiatives or pay off debts. Overall, the company's ability to generate positive operating cash flow is a testament to its financial discipline and operational efficiency. The company's financial health has undergone significant changes in recent years, particularly with regards to its debt level and interest expenses. One notable trend is the substantial increase in interest expenses. According to the extracted summaries, interest expense net rose from $598 million in 2024 to $912 million in 2025, representing a staggering 53% jump. This upward trajectory of interest expenses is not an isolated incident. In fact, data shows that interest expenses have increased by 54% from 2023 to 2024 and a whopping 85% from 2024 to 2025. This sharp rise in interest expenses suggests that the company's debt burden has become increasingly onerous. Furthermore, the total debt level has also seen an increase of $0.5 billion due to the Stericycle acquisition. While this may be a strategic move for the company, it undoubtedly contributes to its growing debt load and associated interest expenses. Overall, these findings indicate that the company's debt level and interest expenses have undergone significant changes, with no clear indication of a decrease in either metric. The company has made several strategic acquisitions to expand its services and solutions. These include investments in businesses and technologies that complement its current operations, minority equity stakes in various companies, joint ventures, and majority equity stakes. Notably, the Stericycle acquisition for $7.2 billion was a significant move, which also included RNG facilities. This acquisition aimed to enhance the company's offerings. On the other hand, the company has also made divestitures to streamline its operations and reduce costs. The domestic environmental solutions business was sold as part of the Stericycle acquisition, resulting in a $14 million loss due to the divestiture of a minority investment in a medical waste company. Additionally, an $11 million negotiated payment was made for the early termination of a contract in the renewable energy segment. These moves demonstrate the company's efforts to optimize its portfolio and focus on core activities. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In terms of dividends, the company has consistently paid out to its investors in 2023, 2024, and 2025. Furthermore, there was an increase in dividend payout from $0.0825 to $0.945 per share for the year 2026. In addition to paying dividends, the company also engages in share buybacks as a way to return value to its shareholders. After a brief pause, the company resumed its share buyback program in February 2026 with an authorization of up to $3 billion. This move demonstrates the company's commitment to maximizing shareholder value through various means. That concludes the financial summary for Waste Management, Inc. Feel free to comment below, and I will be happy to answer them when possible.